I do not front run short patterns, indices, without them being confirmed, because it's a fool's game.
What is the fundamental reason for stocks to keep going higher from here?
If you look at the history of stretch valuations, they usually lead to higher stock prices and even more stretched valuation.
Gold actually triggered a couple major topping patterns. I am still watching for pullbacks. I'm still long-term bullish on gold.
In December of 2023, Germany removed the subsidies for electric vehicles. Demand for electric vehicles plummeted 40% month over month, 2024 to 2023. China is still 60% of electric vehicles purchased because they subsidize the shit out of it.
If you guys start selling out of copper or closing your minds to future long positions in copper because there may not be more electric vehicles, you're missing the forest. You're just looking at the tree.
Welcome to the Future's Edge. I'm Jim Uriel. That's Bob Icino. It's the first Friday of every month, and we have our favorite technical strategist, Mike Arnold of Path Trading Partners. It's always this, by the way, this is a show like for me. I actually do change and alter my investment thesis based on long-term technicals, and Mike helps with that. Thank you to all you guys who've made this show a success. We are humbled by the support we get from you guys, the DMs, the retweets. It is amazing. We are getting close to Christmas. Nothing will make a better Christmas present for the Italian or the wannabe in your life than patronizing our sponsor, Hardcore Italians. Go to the website, the link we provide, go to the website and use our code, which, Bobby, our code is?
FU.
FU. Use our code and get 15% off. Thank you, guys. Michael, what do you guys want to talk about first? Stocks?
Hey, real quick.
Sure, go.
I want to point out that you said it's the first Friday, and it's not. It's the first Tuesday.
Yeah.
We record on the first Tuesday, and this doesn't come out till the following Tuesday. So as Friday is nowhere to be found in this. But
I don't know. Yeah.
Because you're a greaseball, you're a freaking oily Italian, you recognize the first Friday is when you're traditionally not supposed to eat meat. So it's just still stuck in your head.
When
that
you say the
something
first
matters
Friday.
on the first Friday. But go ahead.
Did you go to Catholic school, by the way?
I did.
Yeah, and did you have to go to church the first Friday of every month?
I did.
Yeah, we did too.
Yeah.
Okay, so just so you guys know, as part of my regular long-term investment strategy, every December I rebalance. It was painful for me today when I began that process because I still am somewhat of a bull, and this goes to the people who are watching too. My process is to rebalance my long-term accounts if I have too many stocks. I didn't like to do it, but I do it. Michael, let's look at the chart.
Well, here you got the E-minis just keep grinding higher. Nothing in sight yet for major topping patterns, potentially minor topping patterns now. Caveat this with some other like DeMark stuff I use. We don't talk about it much in here, and Elliott Wave stuff. We have potential major topping patterns. They have not topped yet. They have not triggered yet. So I'm on alert, but they may never trigger. The market could just reset and keep marching higher, even though valuations are absolutely through the roof. I mean, if we bring up here, hold on. I don't normally talk a lot about valuations, but if we look at the Shiller PE, we're now back in July of 2021, before we started the last significant downdraft, we were running a Shiller PE of 38.58. We're now at 38.61. This is the second highest PE outside the little topping area in the .com bubble based off the Shiller PE. From a fundamental, does that mean I short this market yet? Not. I would not short that with your money, Jim.
Right. That makes sense to me. You described the potential setups for a topping pattern. Can you walk us through like what would have to happen to make a classical topping pattern?
If we start breaking down and close a weekly close below 5,700, so we're a long way off from that. I mean, not right now we're trading 60.64. So, I mean, that would make people sit up and take notice in this kind of market, because you have more than one down day in a row and people sit up and take notice like, I don't know why it crashed yesterday. That's the market we're in. And then if we follow through on a weekly basis, and this will probably be out of the way, but the key harmonic, and this will keep edging up a bit if we keep making new highs, about, just remember about 5,500. It's 5,475 at this moment. It might edge higher if we keep just slow grind higher. But right around, if we fall through them with a weekly close below 5,500, watch out, because the probabilities then shift that we could easily retest the August 5th low area. So,
Bobby,
which would,
can I ask you a question?
Yeah.
So I was on a podcast today, and I'm having a difficult time explaining a fundamental thesis for the stocks to keep rising. Is it? Can I just say the business community feels now we'll have an administration that may have their back a little better than the one before? Could be a more inviting regulatory environment coming forward. What is the fundamental reason for stocks to keep going higher from here?
Well, first of all, I'd like to hear the fundamental reason for them to go lower.
That's a great answer, by the way.
Yeah, I don't really know the fundamental reason why they would go lower.
Stretch valuations.
Well, again, if you look at the history of stretch valuations, they usually lead to higher stock prices and even more stretch valuations. So stretch is such a what's the word? It's very individual. It's like 26 times earnings. That's too high. Okay, based on what? Well, based on historically, it's about what, 17, 18, Mike? Somewhere in that range, like long-term historically. But we've had several times, Mike pointed out that we're getting up to really stretched levels historically, but you're picking tops if that's your way of doing it. If you're saying they're stretched now and this is the top of where valuations can be, the tech bubble shows you that's not necessarily the case. It's just like when you get, newer highs often lead to newer highs, not reversal points. We've had 54 new all-time highs in the S&P. If we finish today at a new all-time high, it's 55, right? So stretched valuations often lead to even higher valuations. I'm not ready to pick that top. Go ahead, Mike.
Well, that's why I'll wait for because we'll get an initial downdraft at some point, and then it's the bounce move will either set up a major topping pattern or it'll go to new highs. But there's no pattern yet besides potential setups. And as I said, I'm not trying to say, I'm just saying the valuations are stretched. And when the valuations get stretched to this level, you should know where your stops are based off a long, a medium, and a short-term basis, depending on what your time frame for your trades are. They may never get hit. Could we test valuations from the dot-com era? Yeah, theoretically. But you have to be prepared, because the more stretched it gets, generally the more violent the reaction. You don't generally just get a calm reaction when it gets stretched this much. It leads to bigger potential pullbacks. There'll be warning signs. I mean, the market, even if it's down 2% one day, that's not a crash. That is a pullback. Could it lead to more? Yes, but it's not a crash as everybody thinks it is now.
Yeah, and then, you look at, for example, the street right now, there's only probably 3 major analysts out there that are bearish. The rest are all bullish. And some people say that's a bearish case. Again, when you look at the level of bullishness in the market based on some momentum indicators, it's not very high. Yes, a lot of people are bullish, but the level to which they've invested in a bullish thesis is not that high. So I'm looking more at the idea that, why anybody would think that stocks need to go down just because they've gone up, that's not a thesis to me. I look at it from here and I say, okay, I have a bearish thesis. My bearish thesis is that you look at Scott Besson's 333 plan, right? 3% deficit to GDP spending, 3 million barrels of oil, 3 million excess barrels of oil is produced. I forget what the other 3 is. Do you guys remember what the other 3 is?
We talked about it yesterday. I can't remember what it was, though. Yeah.
But anyway, let's say that he gets deficit spending to 3, right? We're projected to be like 5.1 to 6.
Yeah. That's a big disruption.
There's a bearish thesis for you, right? It's just less a fiscal drag on the economy. And already you have the congressional board, not the CBO, projecting a fiscal drag just with the Trump presidency with 5.1%. debt to GDP deficit. So there are things to predict it. But right now, all the data to me, especially like Q4 earnings estimates, are projected to be higher than Q3 was. So I don't understand what the thesis for it to go down is.
And that's why we'll get some kind of, probably, unless you actually did have a crash, some kind of topping pattern. But there's a lot of things that make me sit up and take notice. That's where I'm just not dumping money in willy-nilly and saying, okay, everything's all fine and dandy. You got to ride the trend until the trend ends, and it will show you it's ending. But just like what's on the screen now, positioning on S&P 500 is very extended. It generally does not hang out up here. Asset managers are near record long U.S. stock futures. It can, yes, can it go a little higher? We saw it back right before the 20, right at the end of 19 and 20. We saw it, there's been some corrections where you get to this level and you could get even a 10% correction. Is that major from this level? No. People will treat it as major, but that's where there is no pattern yet, but I'm going to be on the lookout for the patterns to unfold. Until that happens, in the short term, I got to stay bullish.
So, Mikey, let me ask you about this chart here. This is a weekly S&P chart, right? Do you see a little bit of a rising wedge that could break down here?
Yeah.
Starting about the weekly low, August 5th or so, and angling up.
Yes, you definitely have a wedging up pattern.
I have an eye for wedgies. I mean,
right. No, I know. I've heard that about you. Yeah.
Yeah.
That's the talk.
Yeah. These to me are very, I don't want to call them very reliable patterns, but they're patterns that you should keep an eye on, because if you break that trend line that Mike just drew, there's at least a 50% chance of hitting the bottom of this weekly channel, although I don't like it as much because it's drawn off of that spike weekly low from August 5th. If it were more of a full candle body, I'd like it a little bit more. What do you say to that, Mike?
It doesn't bother me as much. Here's another thing. There's a lot going on in these charts, and if you look at the monthly, let me just clean up the chart. We are getting very, again, overextended from the monthly rotation zone. And there's two ways this can correct. Now, like it did back in March, April, and May, you essentially move sideways and let the rotation zone catch up. We had a little dip in August that made that's why I'm bringing this up, that made that candle that you talked about was the anchor point for the bottom trend line. That dipped in the rotation zone and immediately corrected. Here we're getting very overextended on a monthly basis again. Either we could come up with a pattern, and this would be just a sideways correction. Yeah, you could have a down month in there, but a sideways correction, letting the rotation zone catch up and then launch again. Or you could get some kind of correction like we had in that started in January of 22 and lasted through October of 22. That just was the stair-stepping pullback correction that reset everything before the next launch move that took us higher.
So I just want to clarify the 3-3 plan, because we should know what it is. And it's a 3% debt to GDP, which we talked about. It's 3 million more barrels of crude oil production than we're doing right now. And it is 3% GDP, which should have been obvious to all three of us.
Should have been obvious, yes.
And then the three
of
us
it's not obvious?
About it, so
because of course that's a great goal. Yeah, but you gotta explain how you're gonna get there, which he has, by the way,
right,
through deregulation and through tax cuts, which I like. But I mean, it just sounds like pie in the sky. Let's get 3% GDP. Everyone wants that. Will his plan work? I think it will.
Again, I think the step, let me rephrase that. The path to get there, I said this right after the election. I said it on a couple of our shows. Haven't said it to Mike yet. I see 15 to 30% lower in the stock market. And then when that happens, it's a multi-decade buy, in my view.
That makes sense to me.
If the reason I think we're going to get that 15 to 30%, and I understand that's a big range. I want to be inside of a normal correction and also into a potential bear market that we bounce from. I think if you achieve 333, the 3% GDP will be the last one. And the other two threes might cause some stress, especially the 3% debt to GDP in the short term.
Yeah.
And then you add to that Doge, which one of the things that Vivek and Elon have been saying a lot on Twitter lately is that Doge comes with an expiration date. When you create a new government entity like this, it has to have an end date. You can't just create a new entity. And they all say it's July of 2026. That's
July
a
4th.
rapid, July 4th. That's a rapid cut plan.
Sure as hell is.
So
Yeah.
I applaud them for it, but it probably is going to cause some short-term stress in the markets. But I don't know, Mike, do you think I'm wrong on that?
The based off, I mean, a lot of mathematical models. Again, I'm going back to the valuation stuff. We could see a more of a muddle through. They'll be buying opportunities. I don't know if they'll be buying opportunities for this just slam it in their next decade. I think we'll be more back and forth until we get a massive reset on valuations.
Okay.
Because and then that doesn't mean there won't be buying opportunities. This is where I think market timing over the next few years, instead of just buy everything, especially in the passive flows shift, market timing will come more important. And then after we get a major reset on valuations, however that happens, there'll be a really good long-term buying proposition. I think we're going to go into more market timing though, and we'll have some rip your face off multi-month rallies, and then you'll get some 10 to 20% corrections mixed in there, more so than we've had in the last decade.
Okay, can we look at the NASDAQ just because it has not made all-time highs yet? And or has it?
It's really close.
Just missed it.
Just a bit outside. Yeah, well, maybe it is. So what? Wow, look at this. So what do you think?
NASDAQ watched the low from the week of the 18th of November, 20,382. If we get a close below that, we could easily see a pullback to right around the 19,400, 19,500. And then if we don't get a substantial bounce there, the kiss it goodbye level for me right now on at least in the short to medium term on the NASDAQ is about 18,850. So that's the downside risk. Other than that, the upside is just grinding higher. It's actually broken through on a closing basis.
But not on an intraday basis.
Not on an intraday basis. The high, again, this was recorded on Tuesday, December 3rd. The prior high was 21,340. Right now, we're trading 21,315 roughly. The highest close, though, was 21,231.25. So it looks like we're going to make a new all-time closing high in the DEES futures, but not an intraday high unless something happens in the next. At market, no, the futures are trading for another 40 minutes.
Can you describe like what kind of scenario would make you think that there's going to be a significant short-term push higher? Like what I'm getting at is if there was a consolidation for a couple days, we zap out volatility right near these highs below or above, and then all of a sudden we get another strong push above those intraday highs. Would that be an indication to you that we're going to green light a swift move higher?
Yeah, anytime we break, let me just clean up the chart again real quick. Anytime just looking at pure price action. So this is the major resistance level we're breaking out about. As long as we hold in this vicinity, okay, the vicinity, I'll just call it from about 21,000 to about 21,300. As long as we consolidate it in that area and burn off the overbought conditions again, then I'll be watching for the next breakout play. If we start in the short term, if we start closing back below the rotation zone, I'll start watching for more of the potential pullback. But yes, if we do consolidate up here, it could be set out for another breakout push higher.
Good. So I'm not crazy looking for that. Okay, good.
You know, I look at this chart, man, and I think about you being on that podcast, and I wish I would have been on there with you, because I think when I see a chart like this, somebody says make the case for stocks to go higher. No. I mean, first of all, stocks have a natural upward bias. Everybody knows that. There are just billions of dollars every year that go into long-only funds that are in retirement plans, 401ks, et cetera, insurance companies that have the stock component to their pension
Not to
funds.
mention that those individual companies are trying to shed non-producing assets and bolster producing assets. But anyway,
And then the potential for corporate tax cuts, which could result in share buybacks, all these different things. And then I look at a chart like this, and Mike, tell me I'm nuts. There is nothing on this chart that doesn't tell me to buy the dip. I mean, it might be a big dip, but we don't even have like a rolling over at this point.
No,
anywhere close.
There are no topping patterns. There's just potential. There's some
significant
potential topping patterns.
I want to make it clear, I'm not arguing with Mike here. I just keep thinking about someone saying to Jim, make the case for being long. Yeah, because you got to be long.
You are long.
And that is what I said. But how about this question? Cock the gun. Michael, you have to short one of the big three indexes right now. Which one would you short?
Me.
Shoot you. No, you have to short one
short
of
the
them.
Dow.
Wait. You can. No, I wasn't counting the Dow. I don't even look at the Dow.
All right, the Russell?
No.
You said big three index.
What?
Yeah, Russell, NASDAQ, S&P. Yeah. So
I
I was just saying, when you said Russell, I'm going to say, no, you're wrong.
I short the Russell just looking at the chart, but go ahead, Mike.
Yeah, the Russell is getting very, very stretched, eking out. I don't find the valuations are even more stretched than the Russell. That would be the one if you were going to hold the gun towards Bob. I'm shorting the Russell.
That shows you how non-bearish he is. In terms of what's on the chart now.
Yeah.
Okay. We're getting
you don't have a short
massive divergence up here too on the monthly Russell, and there's some again very significant potential topping patterns. I don't ever like to short without a confirmed pattern being triggered, because a potential pattern, again, as Bob said, you have an upward bias naturally in stocks. And you, along the way, along to making new highs, you're going to have a bunch of potential setups that never, to the short side, that never ever trigger. So I do not front run short patterns in the stock indices without them being confirmed, because it's a fool's game.
Right. That makes sense. There's a bunch of things I want to do. I wanted to do the Mag 7. I want to do gold. I want to do silver. I want to do Bitcoin. What do you want to do, Robert?
Let's go with gold, because I've got questions about gold.
Fantastic. The one thing that's in virtual no man's land.
Well, that chart is telling me an enormous story, but it's non-conclusive story. It's just the other candidate would have been great for gold. The candidate who won is okay for gold, but we need to figure out why.
Gold actually triggered a major couple major topping patterns. And so I am still watching for pullbacks, at least possibly through the end of the year, maybe even into January. Or, remember, things can correct two ways. So far we had the pullback, we've had the secondary reaction. I'm either watching for this consolidate on a monthly basis. So let me get back to that monthly chart. I'm still long-term bullish on gold, but we've triggered some intermediate-term topping patterns. Now, if this hangs out here, let's say we hang out here through the end of December, it could very well be, instead of a pullback correction, it could turn into just a sideways correction, burning off the massively overbought, which we haven't even done anything with yet, even with this sideways correction, and getting monthly cycles back to the bottom. And then I will really be watching for the buying opportunity. However, that doesn't mean it has to be the sideways correction. I know it sounds like I'm hedging things, but because we're going to have a correction of one way or another. And this isn't done yet. It either has to move sideways for a lot longer. When I say sideways, it can move up and down, but really not go to major new highs. Or we're going to possibly correct back down to we could get the 2440s to 24 to 2500 area on a bigger pullback correction, and then I'll start watching for a bottoming, a longer term bottoming setup.
So let's say we get a headline tomorrow. It shoots up to 27.50. Would that be above those two candles from about a week ago?
Yeah,
Those
if it breaks above 27.20,
and then settles there, and then some strength the next day, do you think that there's an up move afoot?
yeah, I mean, we could easily, and when I say that, could still be in a sideways correction, because we could go up and retest the 27.50 areas and then roll over and pull back to the 2600s again. Yeah. So again, it's not the time for me to. Long-term positions are currently being managed from a long-term perspective. From a short-term, it's not back up the truck and load up on gold just yet.
Yeah, no, I agree with you.
Yeah. By the way, Salesforce crushed their earnings, just so everybody knows. I think their stock's up like 9%. What does gold do if Canada becomes the 51st state of the? All right, I'm sorry. I just wanted to make sure. I just wanted to make sure we talked about that for 2 seconds, because I think it's funny as hell.
It was funny as hell, yeah.
So to me, when I look at this chart and I think about sort of the new fundamental thesis, because I think you're right, Jimmy. I think the incumbent / Kamala Harris would have been much better for gold longs. But I do see one scenario and one scenario only, and we'll find out a little bit more about that scenario December 12th. No, December 7th. That's the next Fed meeting, I think, right? Is that I think the Trump presidency, immediate inflation, if his first 100 days is actually successful in his eyes, is a real thing, a sort of a resumption of early inflation. And the Fed, if they don't continue to cut rates, gold's going to suffer, and that could be like the downside correction. Mike is thinking is one of two things that's going to happen. But if they do continue to go on more of an easing path, and we see inflation stabilize here and possibly start to slowly climb higher, and the trigger will be goods inflation because services inflation is still sticky, you might get that last leg up for gold that you're probably not going to want to hang on to those gold longs until like 2026. What do you guys think?
I like it. I still want to hang on to my core gold longs and just trade around them, which as I mentioned to you a year ago, I started selling call spreads against it, occasionally buying puts just to get a yield from my gold. Because once we had the big strong move higher, I was playing for the astronomical move. So, selling call spreads to get a yield's fine. So I'm not going to sell my core gold holdings, but I like what you're saying. I think if I can underscore it, if there is persistent inflation, but the Fed doesn't think they can necessarily fight it too aggressively because they have to facilitate government borrowing or whatever the reason may be, that could be a good scenario for gold going on, in my opinion. Yeah.
Mike, what do you think?
Yeah, definitely. I mean, as I said, long term, it's still bullish on the charts. We have more room to run from the long-term models. We just have to get out of this. We were in a massively overbought condition, and we triggered. I mean, if you look at the monthly chart, I mean, this was a massive run higher, all right, and very overextended. So a pullback makes buying it a lot easier and a lot healthier. I don't want to be accumulating a whole gold position up here. I want to be managing a gold position, even if you waited until it broke out, even in March of 24. Look how far it's run since then. So a pullback, even like to the 2460s area, is not going to kill that initial, if you waited till that breakout to take advantage of it. But if I buy up here and then we get back to that 2460 and I've done a ton of accumulation up here, it's more poised for that pullback / some kind of correction than it is to push drastically higher in the short term.
Gotcha.
Looking at that chart, like I see that's like a 2000 level that you just drew in, right? Which looks like a very compelling level, and which it obviously is. Big round numbers are important, but man, can you see a pullback to that level? I'd buy it with both hands there.
Well, yeah, it just depends. It would depend on how it got there.
Yeah,
I'd start looking if it gets back there. Yes, I'm looking very aggressively for for buying opportunities, but that means something else is going on if it were to get back all the way to there, especially if it did it in a if it sort of mimicked this up move back down. I would be looking for buying opportunities. I would not be as aggressive with buying opportunities.
Okay. All right.
Because
Can we
then it
look
would
at
have been a
silver?
vertical up, vertical down move.
Yeah.
And then it generally takes more time to establish a solid base. So it would give time to accumulate in that level.
Right.
I'd be shocked if it got back there, but if it did, that's how I'd be looking to play it.
Can we look at silver? I thought that chart looked compelling for a reason. I'll make my case very quickly. Wasn't there a 32 level that it bounced off of right at is this a daily?
There's the daily.
Oh yeah. So the 30 level seemed to me to be sticky as hell. Now it seems like we're rounding out of it and heading higher. Thoughts?
We're definitely rounding out. Let me clean up this chart a bit because we had a couple very sloppy patterns that did trigger, but they're not going anywhere. We have a very sloppy horizontal basing pattern. If we can follow through with a close above 3160, then I'm going to be looking in the short term to target. My first targets will be 3240 and then 3307. We close above 3307. We could easily retest those highs areas, but this has not been able to follow through with a key close above this 3160 in a number of weeks.
Yet.
Right. We have yet to see. It could do it this week. It might not, but I'll be watching for this would be a base pattern. It's almost let's just put on the targets. I'm just curious where it would be if we treated it as a sloppy double. And it's virtually the same or very similar. I said 3307, it'd be 3320. So right. If it played out fully, that would be the next level. But if it closes above that 3307, the magnet price shifts then to the 3440. That's the bullish thing.
You get my fundamental thesis for silver, like a shift from precious to industrial, but like a non-committed shift in the Donald Trump presidency. You know what I mean? Like, do we really want to buy copper, platinum, palladium, or do we just want to tiptoe in to the
funny.
industrial?
It's like, I think that's why I've lost most every time I've traded silver, is because I just don't really understand the juxtaposition between the precious and industrial side of silver. When does the precious take over? When does the industrial take over? And when do they give up on silver and start going copper, platinum, palladium, like screw this silver? It's not conductive enough. There's not enough of it. And I just, even on technical patterns for me, like I see this as sort of a Justin Fields quarterbacking where he probably has the talent, but he's not quite, mentally. Silver looks like it could go up from here, but I don't see enough of it. What's this gold silver ratio?
Yeah. Gold silver ratio on a longer term basis. So I'm just watching because this is drastically still. Gold has outpaced silver drastically. So either silver takes over or gold picks up potentially more. Where I'll start watching on the ratio basis is if we start breaking, and this is just a 1-for-1 contract ratio, not properly weighted. But on this ratio, if we start breaking below 76 area, then I'll start. It could be a gold. We're getting that pullback and silver holds more steady, or it would require silver to really break out to the upside. So I just keep an eye on this in the background.
Right.
Because
that makes sense to me.
It's something very sort of interesting to follow to see, okay, maybe is there a way to play this if silver starts performing gold and breaks that ratio pattern, how can I take advantage of it?
And the historical average is in the low 60s, and right now we're what? High 70s, right?
Correct.
Yeah.
So that's something I do keep an eye on. It's something you might want to just sort of go back if you're listening to this or watching this at home. Go back and if you're interested in silver or how silver and gold interplay, put up the ratio chart and watch for either key resistance areas or key support areas to get broken, because that could start a new medium-term trend where one outperforms the other.
Love it. What do we got?
Let's look at Tesla. I want to look at Tesla.
Sure.
So, when I was looking at the daily on Tesla earlier, I said to myself, I see a really, really sloppy head and shoulders, with the head being that November high, that early November. I'm sorry, the left shoulder being that early November high, not all the way to that late October one. Right. So the neckline being about 4 days to the right of that. It's sloppy as hell. But then I looked at it and I drew a couple of channels with that same area with a couple of wedges, and I just lost my mind and shut the chart. So I wanted to get a view on this. I think, to me, like, the fundamental story for Tesla to me is obvious. It's Elon's proximity to Trump, right? If Trump removes the subsidies for the electric cars, but then deregulates the self-driving area of the automobile, Tesla benefits, right? Yep. His proximity to Trump, it's difficult for me to take that out of the equation of looking at Tesla now. Now, it may not be able to do anything. I mean, Elon's the first guy to say, get rid of all subsidies and let's see who wins. He's said that multiple times in his career, right? Yep. He also said, go fuck yourself to Bob Iger. So I'm never sure what he's talking about on a minute-to-minute basis. But, Mike, what does this chart look like to you, just sort of overall, starting with the daily and going out?
I mean, it's still in bullish mode. We still have a magnet price of around 375. It's fundamentally, even if fundamentally, it's still massively overvalued. But that doesn't matter. It's Tesla. So it's also, if you look at the weekly, it's very stretched from the rotation zone. Could you even see a pullback below 300? Yeah. And it would just reset to the prior major breakout area into the rotation zone. If you look at the monthly, I mean, the prior breakout zone again was at 280. So based off this, is there potential room to the downside for this to run? Yes. Do we have a massive topping pattern yet? No. The early warning sign at this point is a daily close below 329. And then if it follows through and closes below 309, we could easily see that return to the 280 level possibly.
What was your upside target on that again?
Upside target was 375.
All right, because I was on Neil Cavuto's show today on Fox Business and was supposed to do two segments, one at noon Eastern and then another one at 12:30. Noon Eastern, we just talked about the general markets. 12:30 was supposed to be Tesla, and I had about a 383. So I'm happy to hear your 375. I didn't get a chance to talk about it, but it's interesting to me to see where it goes from here. But I had about a 383 target. Yeah. It's actually right around there, Mike, but I didn't want to go I never go as high as what the chart target is. I always go a few dollars lower when I do a TV interview because I want to be right.
Right, of course. Well, actually, even when I trade it, sometimes I do that because I don't want to be wrong by 2 ticks. You know what I mean? So I always go 5 ticks under where I think, right?
Yeah, and if you ask me to come up with a topping area where I'd structure and watch if this does keep running higher, where I'd structure and take something off the table, it would be between 375 and 384.
Perfect. All right.
So here's a question, a side note. This is a true story, a good friend of mine. I was looking at his portfolio with him, as friends often do to us to make sure, they want outside eyes. What net worth? I want you guys to answer it at the same time. So I looked and he had never worked for Tesla, but he had bought it at the right time and he had $1 million of Tesla stock. What net worth must a person have to make it be reasonable to have $1 million of one stock? Answer on the count of 3. 1, 2, 3.
At least 10 million.
Michael?
I was gonna say 10 million. I actually was starting to say 10, and then I'm actually thinking I wouldn't do it with that unless I had 20 million.
Yeah, I think because at first I did say to him 10, Bobby, which is funny because it's the same exact methodology as in your head. Why have that much exposure when you are winning the game so clearly? You know what I mean?
Yeah.
So just takes him off, and his net worth was about 8 or 9, and I did convince him that he's probably a little too overextended in one stock.
So I'll tell you guys a story that relates to that. An analyst that all three of us know and respect was talking on one of his videos today, and he talked about how he puts different allocations to different conviction trades. And he puts the highest allocation to the high conviction, medium to medium, and low to low. And to his credit, he puts higher allocations to long stock trades than he does to short stock trades. And that part I respect. And he actually invited people to disagree with him by email. And I wrote him a big disagreement. And I said, because I first of all, I only put on high conviction trades. I don't put on any mediums or lows. And second of all, it smacked of analyst talk more than trader talk, right?
Yeah.
Because even if you have high conviction, nobody has a 99.9% process, right?
Nope.
I would argue that my best trades probably have about a 62% probability over time. And even in those trades, I don't know when the 38% of the time is going to happen. And when that 38% happens, if I've got a larger risk allocation of that, it screws up my entire portfolio because now I got to earn that money back. And that just encourages me to put more high conviction trades on, or convince myself that my mediums are highs, and so on. Also, the highest conviction trade I ever had, I lost close to 6 figures. It was when I blew up back in the early days of trading, and I had
You're so damn sure.
But I was positive I was right. So that's what that smacks of to me. It's like you have the most exposure to your high conviction Tesla position, but you could be wrong, even if you're highly convicted.
What do we got?
Back to real quick. See, I wouldn't want 10% of my net worth in any one instrument, even in any one instrument, because you don't know what, again, one thing goes haywire. I don't want to wipe out 10% of, and it might not stop at wiping out 10%.
Yeah.
You don't know what you don't know.
Yep.
And if you have 10% in any one thing, and all of a sudden you find out that, Elon Musk is part of Pizzagate, you're going to have a big problem.
Right. And then we're screwed.
Yeah.
Yeah.
Not that Pizzagate is real. This is just.
Well, of course it's real. There's literally was 2 people arrested for running a elite level pedophilia ring. One was convicted. So if it's Pizzagate's not real, it's because it was in a Chinese restaurant and not a pizza parlor.
It wasn't a pizza parlor, so calling it Pizzagate is wrong. Did you guys? Never mind. Now you're
getting into the nuance of fact checking.
Did you guys ever hear of the? And then when I start with that, I should just shut up.
Right. Michael.
See, what I was going to say is you just got into the nuance of fact checking, where they say, we're going to rate what Trump said blatantly false because you get one nuance wrong.
Yeah.
He said there's 100,000 people at his rally and there was only 96,000. He's a liar.
When fact checkers started adding in missing context, and then at the end rating something false because it was missing context. That's the thing. Again, I want to do a Substack on this. Missing context is bullshit. There is no evidence of is bullshit. Anytime they use these particular phrases, there's no evidence of. I was rewatching Yellowstone, right? Season 5, because they've released some of the end of season 5, but I already forgot what happened through season 5. And at one point, the fictional governor of Montana says, we have no confirmed wolf killings of cattle. Right? No confirmed at all. And John goes, I could show you 5 right now. And he goes, 5? He goes, do you know of a dog that has a paw print as big as my hand? He goes, well, that's not really evidence. And he goes, my word is my evidence.
Right.
And I thought that's a perfect example of we have no evidence of, yet there's a paw print the size of a human hand, and it's not a bear, right? Near the dead cattle. I digress.
Did you see the Leslie Stahl interview that everyone was replaying today from Donald Trump back in the election, where he started mentioning the Hunter Biden laptop, and she just really rudely was like, "That's been discredited. That is not true." And he's like, "Of course it is." You know what I mean? We all knew it was true at the time. Why would they have all panicked so much about it?
We're completely digressing, but Mike is smiling, so it seems like we could continue to completely digress.
By the way, that's not a right-wing theory. The Hunter Biden laptop was a true story that 51 intelligence agents swore it wasn't, and every media outlet said they couldn't run it, despite the fact that everyone knew it was true. This is people who want honesty versus people who don't. It's not right versus left. They're trying to pigeonhole us all, and it's really starting to piss me off.
Yeah, we could tell. Mike, what do you think about this chart?
Well, did we already talk about this chart?
Did we already talk about
did.
it?
Can we do
Copper had a move today. Let's see if it broke out of anything.
Copper, well, copper technically triggered a channeling double bottom.
Yeah.
Okay.
Already hit the first target. I actually talked about this on my YouTube live stream today. As it was happening.
Problem, right? That's a problem that it already hit the first target.
If you're trying to get into it from a shorter term basis, I mean, you have to be a little more nimble with stops and everything. It did trigger it, so could it get back to 430? Yeah, it could. Is it in a longer term buy mode yet? No, it's not. It came back down. I think we talked about this last time when I said it closed below the 62.5, that 425 area. Then the magnet price was 403. We nailed that 403, making the double bottom pattern. Second low was just in front of that 403. And now this would be a minor corrective pattern, but it is not the start of a major new bull move yet.
What would make a bull move?
A bull move, I'll sit up and take notice if it can get above 440, and then it has to follow through with a close above 449.
You got to get above the 200, don't you?
Yeah, well, that's above the 200s at 432. So 440, it's got a lot of lifting to do because this double pattern takes it back to the 200, and which was a prior breakdown zone.
So some perspective on this. In December of 2023, Germany removed the subsidies for electric vehicles. Demand for electric vehicles plummeted 40% month over month, 2024 to 2023. China is still 60% of electric vehicles purchased because they subsidize the shit out of it. If we are flirting with the notion of dropping subsidies in this country, I think the demand will plummet, which, by the way, I think that chart reflects that to a certain extent already. And then maybe throw in some tariffs on China, who already are starting to buy less copper from us because of the threat of tariffs. It could damage their economy. I still think I'm not as we're operating at copper deficits, and there's still electrification going on. I am still a copper bull, and as Bobby knows, I've been a major copper bull for 3 years. I'm less of a copper bull today.
Can I add something into that?
Sure.
To the thesis, if you guys start selling out of copper or closing your minds to future long positions in copper because there may not be more electric vehicles, you're missing the forest. You're just looking at the tree.
I was just talking about the short-term thesis.
Yeah, agreed. But like longer term, AI, quantum computing that seems to be getting closer and closer. We need grid, man. And with the grid, we need copper. And I think we now have an administration who might actually focus on that. Mikey?
And I want to also say this is why I'm still in the short to medium term, besides this little pattern that already hit the first target. I'm still short medium term bearish. I still have a magnet price of 373, which is where I'll really get interested in if you were looking on trading copper around a core position. That's where I'd be looking to start. If it gets down towards that area, it'd be very attractive. And that's where the probabilities are sitting, that we could get back down to 373 over the next few months. And then it could get very interesting.
Cool.
Can we look at MAGS, MAGS, which is...
Oh, yeah, I love that.
Yeah.
Yep.
It is Roundhill Management's Magnificent 7 ETF. I did talk about this on Cavuto, and somebody on Twitter asked me, what was that ETF you were talking about? Because I gave sort of a thesis for it. No. So what do you see here, Mike?
I mean, we've talked about this thing a couple times. Remember when you've asked Jim how, all right, what would me watching for a bullish pattern? So we'll start with the weekly chart. So we came up here and we had the one pausing bar right at the all-time highs, which was a minor base, and then we broke out. Now we had a little corrective area, and we're basing above this $50 mark, and now we're breaking out again. Is there a topping pattern? Yeah, there's a potentially a minor one up here, but it would have to get a close below 50 to trigger. Other than that, it's just still in bull mode, grinding higher, and the next targets higher are 54, 35, and roughly 56.
So on the weekly chart there, that one that you showed, that one red candle you showed, I call that a flesh wound bar. It's literally just a flesh wound. You're not bleeding out from it, right? It comes down and retests, and I love those kinds of patterns. But I want to tell people, like, if you're interested in technical analysis at all, we did talk about this the last time we were on with Mike, and he was dead on correct, just like he was in copper. And you guys should line up our shows with Mike and watch the progression, because if you watch the progression from show to show to show, because we cover a lot of the same things like the ES, the NASDAQ, gold a lot of the time, sometimes crude multiple times, you're going to want to subscribe to the Path Trading Partners YouTube channel after this, because this is what I'm talking about. When you're looking at something like this that could potentially be somebody's longer term holding that they might have to rebalance at the end of next year, as per Jimmy's advice, you're looking at some really solid analysis here, and you shouldn't sleep on this kind of stuff. Don't just look at this as like, this is what Mike said last month. It's still good 2 weeks from now. May not be.
Yeah.
And here's what's interesting. If we did close back below the 50 level, it would take us back potentially to a full return of the bottom of the rotation zone. The only thing that would really, this would kiss it goodbye for me at this point, is if we close back below 44 on the max. At this point, there could be other patterns that develop over the next few weeks, but I can't speculate what pattern is going to develop when they're not there yet. And if you remember last time, I gave you the levels last time. We had 52.81, and we've just hit it.
By the way,
now.
NVIDIA's in the Max 7, of course, right?
Yes.
Is it AMD? Is Micron? Who are the fringe ones?
Mags?
I mean, I can think of the 5. What's that?
Microsoft, Amazon, Apple, NVIDIA, Tesla, Meta, and Google.
Well, that's 7. Okay. So no.
That's
okay.
the Mag 7.
So no, like. Yeah,
it's not an anagram. Is that right?
No, right.
It's not.
You're not trying to spell out.
Not technically. It started out when it was.
What did our badges used to be? We used to call those something. I don't remember. It's not an anagram. That's not the right word. But
no. What was your badge?
Mine?
Yeah.
BIX.
Oh, I remember. Yeah. Mine was just JI. Yeah.
I couldn't do BI because it's spelled buy, and I didn't want to deal with the jokes. And then I thought, well, I'll do BIZ. And then I thought, oh, that's so douchey. Like I'm doing biz.
Right.
Yeah. And then I went BIX, and they went with biaxual anyway. So it didn't matter.
All right. Are we done?
Yeah. All right.
Mike,
tell me where to find you before I play us out.
Mike, what was your badge at the SIBO?
QRB.
What does QRB mean?
I wanted ORB, but I had to have QRB.
What does ORB mean? I can play this game all day.
You wanted orb.
Oh, like, okay, orb. I gotcha. Yeah.
The oracle.
Right, the oracle. All
No,
right. Find
I'm not
Mike
that.
Arnold at Path Trading Partners. As Bobby said, subscribe to that channel. It is a fabulous channel. Mike Arnold knows what he's talking about. That's why we have him on every month. He guides my investment. He guides my trades oftentimes. The reason I mention investments is because you usually see this a week later. But anyway, this is Futures Edge Show. I'm Jim Euro. That's Bob Iacino. Thank you, as always, for joining us. We just mentioned a couple of weeks ago that we wanted to blow out our YouTube channel. We already have 1,200, 1,300 subscribers in a matter of weeks. We'd like to get that up to 25,000 real quick. And it's not because we just are looking for attaboys, likes, and pat on the backs. It is because increasing your distribution channels anchors us into the narrative where they can't be canceling us as easily. And believe me, they have canceled us before. But anyway, thank you guys so much for your support. We appreciate it. None of this works without you. Bobby and I's mission is to create a media company, an independent platform where people can give their absolute honest opinions without worrying about overzealous sponsors or producers. Thank you guys. This is the Futures Edge. Bobby, did I miss anything? Oh, it is Christmas. Buy people from Hardcore Italian's website. Use our promo code FU. Get 15% discount. You will not be sorry. There's some absolutely great content on that website. Bob, you got anything final or no?
Oh, Mikey, go ahead.
Hey, I just wanted to mention, I think I've got besides YouTube, the streaming's working on X again. So if you want,
fantastic.
Oh, nice.
So it's every morning on X. If you want to follow me at MG Arnold, you can even watch the streaming going on X.
Perfect.
We might be working with Hardcore Italian in the very near future, doing our own shirts for this show. I think I'm going to suggest one with a 51st star. What do you guys think?
Well, Canada.
Canada.
I love it.